Hey guys, it's Carter. Welcome back to the channel. Now in today's video, we are diving in and looking at DWAC, also known as Digital World Acquisition. As of today, the stock popped up a whopping 7%, which is pretty decent for a stock like this. So we're going to be talking about what's going on and answering these questions of should you buy DWAC stock. So I hope you guys all enjoy it. If you guys get anything in value out of it, hit that like button and subscribe because it helps me out when you guys do that. So now let's dive into this. Alright, so for those of you that don't know what DWAC is also known as Digital World Acquisition. That company and Trump Media merged together to create and form a social media platform called Truth. Now, the reason why they merged with Trump Media is because Trump is pretty much an absolute powerhouse when it comes to pretty much almost everything. Now, he's been banned off Facebook, he's been banned off, Twitter, and a variety of other social media sites. So his mindset was, why don't I just create my own? He wanted to create something that was almost like a hybrid between, like a Facebook and a Twitter. And let me tell you, he did a relatively decent job with it. Not him, but his team, obviously. He's an incredibly busy guy. He's not coding software. But the thing is there has been a couple of people that said it's pretty glitchy and it's kind of laggy and stuff like that. But that's beside the point. Now, as of today, the stock popped up 7% because of this news article. If we go ahead and we look at it, it pretty much states that DWAC is up about 7% because a grand jury indicted Trump on hush money charges. So anytime you have some sort of news going on with pretty much the face of the company, you're going to have this stock pop up or in some cases crash down. So this is just some sort of catalyst for the stock to move higher. Now, should you invest into DWAC? This is by far one of the most common questions I get asked when we talk about, stuff going on with this company. And let me tell you, there's some stuff you have to know before you make that decision. So, very first thing, the company has very little to no revenue, which is never a good sign, but hey, if you're a smaller company starting out, it's pretty common. Number two, company's unprofitable. They don't have any profit. Obviously, if you're gonna grow a company, and sustain it for a long term, you need to be profitable because you'll just eventually burn through investors' cash. So understand that as well. And the last and final thing you have to understand before you make that decision of should you invest is it's very, very, very volatile. We've seen this thing squeeze up all over $100, crash back down to under 10, pop back up, crash back down, just very, very, very volatile. So anytime you have increased volatility, you'll often have increased, risk and often higher rewards because of that volatility. So for me, I think it's a high risk, high reward play. In answering that question of should you invest, I think if you're going to invest, the strategy I would recommend, dollar cost average it and keep it under 1% of your portfolio. I would not go heavy with DWAC just because of how volatile it is. I would rather see you guys invest in the more stable companies in ETFs like the S&P 500, SPY, VOO, or VUG. And if you're gonna invest in the individual stocks, keep it under 1% when it's a high risk, high reward. Because one, you always can invest more down the road. Two, if this thing goes to zero, you don't want to be out half of your portfolio. Right now, if this thing goes to zero and you're only out 1%, that's no big deal. And if you see this thing start making a reversal, you always can invest more. That's the way I always looked at it. I just think it makes more sense for me. But guys, that is what's going on with it. So I hope you guys enjoyed it. If you guys did, hit that like button, subscribe, and we will see you guys tomorrow. Remember to stay happy, guys, stay positive, and stay safe. Take care, everyone.